I really want to get back to my little rant on the economy moments ago. Look who's here. Scott Martin, Fox News contributor. Look, Scott, we've got the longest bull market ever. The economy is in great shape, I think. I mean, disagree with me if you like. But I think this rally keeps going. What say you?
I agree. A good friend of mine, i.e. you, called this a summer rally. I couldn't agree more. And you know, Stuart, you called it a rant. I would call it a dose of reality, some real common sense here, because you're right. I mean, I know firsthand. I mean, 401k balances, you know, the media says that America's not sharing in this prosperity. Get out of town. I mean, we manage 401ks for people. We manage individual accounts for people. 401k balances are at record highs, my friends. So don't tell me that some of the Trump policies, some of the economic developments, yes, maybe some help from the easy money at the Federal Reserve, which is going away, by the way, have not transpired into the wallets, or not at least taken place into the wallets of the American people. And that's really what we should be celebrating here.
Well, we've got this report from, I think it's Towers Perrin, I think is the not their full name, but that's a manpower kind of organization, the statistical company.
Right.
They say that workers are about to take home their biggest paychecks in years. In other words, big pay raises are coming for lots of different sections of our society. Okay, if that's the case, where would you tell them to put their money?
So, as far as stocks go, it's interesting. You know, I love the summer rally, and I don't want to spill the party punch here, but for me, in rallies like this, where, you know, we're getting up to midterm elections, you're talking about, with some of the guests earlier, about what the next risks are, Stuart, to the market. I believe it's midterm elections. I believe it is a possible, maybe a policy mistake from the Federal Reserve if they raise interest rates too fast. So I'm not chasing some of these high-tech names that we already own, by the way, with some of the new cash, but I'm looking at things like John Deere and Company. I'm looking at things like Alibaba,
okay,
which, by the way...
Let's deal with Alibaba. I put that on the screen just a moment ago. Alibaba. I know you like it. Why do you like it so much?
Well, two reasons. One, I believe the sell-off's been overdone. The stock was at a couple $100 a couple times this year, and it's been absolutely smoked in the last couple months. And that's because worries about the trade wars, Chinese economy maybe faltering. But let's face it, Alibaba is a dominator. They make tons of money. It's almost Amazon-like in China with all that they do with the cloud and so forth, e-commerce. So to me, this stock has been thrown out with the bathwater and the baby and the family, the rest of the family for that matter. So to me, this is a good buy here, especially ahead of earnings and the fact that it seems like this one's been taken down with all the hate on China.
Now tell me about John Deere. Full disclosure, I got a John Deere tractor and I love that thing. So why do you like the stock?
One of my best memories was riding a John Deere tractor with my dad growing up, so I'm right there with you, Stuart. And I'll tell you what, recent earnings from John Deere were okay. A little bit of mixed up, too, in the tariff wars and things like that, concerns about agricultural business. But it had a lot of volatility down here. And just looking at the chart on John Deere recently and how it's defended some of these recent lows, especially lows vis-a-vis what it had some months ago, I believe John Deere is ready to make a move back up, especially as some of these trade wars hopefully get alleviated.
All right, Scott, we hear you, and we thank you very much for being with us. Good stuff. Thank you.
See ya.